Good morning. This is Bill Hayes with Kenilworth Asset Management, and today I'm going to talk about how do you try and find some ideas to do with your cash, get some income, and look at stocks if you think the market's high and you haven't participated a lot. We're going to talk a little bit about what's going on and how you can use options and maybe look at some yielding ideas using MLPs. But first, I want to say my condolences on September 11th. Family members who lost someone, and thank the armed services for all the work that those guys, ladies and gentlemen have been doing to protect this country. So thank you guys. All right, so you got the 10-year note at 294, you got the 30-year at 387. So what are you going to do with your money? You've been watching the market go up. You don't know what to do. You might think it's a little expensive, or you got a lot of cash sitting around and you haven't committed enough to the market, but you think it might be too high. Here's an idea. It's called selling puts. I've talked about this in the past. We're going to revisit it right now. Selling a put is an option that bets the stocks to go down. All right, so if you buy a put and your stock goes down, you make money. If you sell a put and the stock goes down, well, you have to buy that stock. But that's not a bad thing. If you sell a put and the stock goes up, yeah, you get to keep the money from the put. But if you sell a put and the stock goes down, they will put you the stock. So that means you get to own the stock, which in a market that you think is high isn't a bad idea, because while you wait for the stock to come down, they're paying you. All right? So what that means is you're making money on a stock you don't own until you own it at a price you'd like to own it. Kind of sounds like an interesting idea, right? Well, I'm going to give you some stocks. Now, the higher the volatility of a stock, the greater there's going to be what they call premium. An option, just to revisit real quick, has two parts to it. The first part is intrinsic value, which is what it's worth at the day of exercise. Or so if you own it, it's what the real value is in it. And then premium is everything above that. The greater the volatility of the stock, the higher the premium, okay? So now what do you got? Well, when you got higher volatility stocks out there, you can get much greater premiums. I'm not talking about that today. And the stocks we're talking about today are for illustration purposes only. You got to consult with your financial advisor. Look to do them. We're not making recommendations in the stocks, just using them for examples. But here's some ideas. Caterpillar recently has pulled back, but maybe you like to own it a little bit cheaper. If you sell the January 80 puts, you'll take in $2.25. So as you know, one contract gives you 100 shares of stock, right? So what does that mean? Well, that means if you sell this, you're waiting for the stock to come down below 80. You'll buy it before, at January for $80 or cheaper if they put you it. In the meantime, they're paying you $2.25. That's not a bad deal. Another one, you could look at Chevron. Stock's around 123. Maybe look to sell something in the $115 neighborhood. Take some money in there. JP Morgan, another great name. It's 53. You think it's expensive? Look for something cheaper. What you're doing is you're utilizing the option markets to buy stock somewhere in the future at a cheaper price, and they're paying you while you wait. So as I said, I just use those for illustration. I'm not making recommendations on those stocks, but if you have a portfolio that you're looking to expand in the stocks and you think they're expensive, look at these ideas. Other yield ideas, you can look into, and that's also a great way to get income. Other income ideas, look at some of these MLPs or master limited partnerships. Historically, they're the pipelines. They've been increasing in value, plus they have to pass through their earnings through dividends. So as they increase in value, so their dividends. Not another bad way to go. You can look at some names out there that are really good. If you want to find out more about these or some other ideas, you can contact me, Bill Hayes, at Kenilworth Asset Management. I can reach at 847-920-0400, or consult your financial advisor to see what's best for your portfolio. Thanks, and have a great day.